Today we're going to talk about monthly reports and what you should be looking at as a small business owner on a month-to-month basis. My name is Tony Cameron with TLDR Accounting, and we provide tax and accounting services to therapists in private practice and other small business owners. So the monthly reports, if you use QuickBooks, it's super easy to pull them. A lot of times you just got to go to the reporting tab and then you'll see a whole list of them. The three that I'm going to cover today on a pretty high level is the first one is the balance sheet. The second one is the profit and loss statement. And the third one is the statement of cash flows. And then I'll talk about KPIs a little bit, but not too in depth because they do change depending on the type of business you have. So the balance sheet. The balance sheet answers the question, what does your company have? So it compiles the information from your bank statements, your credit cards, if you have any inventory, how much money you've contributed to the business. It pulls in all of those numbers. So it's what your company owns and what your company owes and the record of ownership. So it's your assets, which your company owns, your liabilities, what your company owes, and then equity, which is what ownership has contributed and taken out of the company. So your balance sheet, like I said, a lot of times the first item is your bank balance on 12/31 or the end of each month. Then inventory. The next section is the liability section. So this is things like your credit card, right? Your credit card balance as of the end of the month, or if you have any loans outstanding, what those are at the end of the month. And then lastly is the equity section, and that is how much you've contributed and distributed from your business along with your earnings, because it compiles all that into one number. It's good to take a look at it at least once a month. A lot of folks know what their bank balances are, keeping track of that much more frequently. The reason I encourage you to look at your balance sheet and not just your bank balances is just to make sure that there's nothing weird on there. Every now and then something in the accounting system, you might accidentally put something to uncategorized assets and you'd be like, oh, what's this uncategorized assets for, $5,000. That would then be something to either look into if you're doing your bookkeeping or talk to your bookkeeper or accountant. The second statement that I would encourage you to be looking at on a monthly basis is the profit and loss statement. So this is tracking the income you bring in along with what you're spending. So it would be how much ice cream you're selling, how many therapy sessions you have, and the total cash value that you've brought in for that time period, right? So if you're looking at it on a monthly basis, so you're looking at it in March, it'll have the total amount of income you brought in for March. The next part is the expense section. And so the expense section, what they would be talking about is how much did you pay in office rent this month? How much did you pay in software fees? And it categorizes all of that information. And then it comes up with your net profit for the month, right? So income less expenses. But the profit and loss statement lets you answer questions like, is my business profitable? How much profit would I make on another sale? Am I spending a good amount of money? Or am I overspending in several categories? You can calculate what percentage of my revenue am I spending on payroll or office expense. And it's one of those statements where it gives you a lot of information, though most folks looks at it and it's like, oh, it's just a list of my income and expenses. Well, once you start comparing it, maybe you compare it to the month before or the year before, right? Maybe you look at March versus February or March 2021 versus March 2020, and you can see how your business is doing in comparison. Once you start bringing in comparison numbers to these, it starts giving you a wealth of information that gives you then data to make more decisions within your business, right? Instead of running your business on a hunch, you should be like, here's the data in front of me. We're selling X number of ice cream cones per month. We need to get to, Y number of ice cream cones per month. What does that look like? The third statement, which tends to be compiled, and the three big ones, is a statement of cash flow. And so this is showing what cash is coming in and what cash is leaving your business. It's not quite the same as the profit and loss statement, because what if you're using a credit card? Your credit card isn't actually cash. You're using it and then you're paying it after the fact, or maybe you're carrying a balance and so you're not actually paying any of that. The statement of cash flow also shows any money you put into the business. So say that you have a really low month. Unfortunately, there was a lockdown, so you had to close your doors for a week, and you had to put some money into the business to cover your office rent. The statement of cash flows would show that cash coming in, because it's all about cash. It isn't just about revenue. It's what income, what money is coming into the business and how is it coming into the business. So it's the same as if you got a loan. It would show cash is coming in from this loan. It's a good idea to keep an eye on it, because it lets you know if your business is self-funding itself or if you're consistently having to put money in, right? One of the big things with your business is it should pay for itself. You shouldn't have to be putting thousands of dollars in each month. Now, the first couple of months, or maybe the first year, depending on if you have a cash intensive business, that might mean that you're putting money in pretty consistently. My recommendation in that case would be you should have a budget and you should know how much money should be in. But in most service-based businesses, say a therapy practice, law, anything like that, it's more your income is dependent on people. And so you shouldn't be putting additional dollars on a month-to-month basis. The business, the sales that you're making each month should fund all of the expenses. And if they're not, well, then you need to be looking at your expenses, and maybe you do need to bring on an extra client, right? Those are the type of information that the statement of cash flow gives you, because then you can look at your profit and loss statement and be like, oh, I'm not bringing in enough money to cover all of the expenses. My credit card balance keeps growing. That means either you're spending too much, and so we need to reduce your spending, or you need to increase your income, or maybe both to cover it. Lastly, KPI reports. So key performance indicators. There isn't a great way to just pull this and say like QuickBooks. This is one of the things that there's certain metrics for each type of business, depending upon that business, that you should look at. If you're a therapy practice, average session fee is a great one, especially if you're just starting out. If you're an ice cream shop, how many times have your ice cream artists been able to convince someone to buy an extra scoop? That would be a great metric to be able to track on a day-to-day, week-to-week basis. Or how many people have come into the shop and not bought. They've been like, I actually don't want ice cream, right? So those are all key performance indicators. Now, each business is different. Like I said, average session fee for therapists, great one for that type of business. But at the same time, for therapists, another good one might be how many people are calling to make appointments with you. Like how many new clients per month do you have contacting you? Right? Or how much turnover do you have? Are you someone who is working with a client to solve a problem, and they really only stick with you for like 3, maybe 6 months, and then they drop off? Then you want to know how many people are contacting you, because you need to replace that client every 3 months. 3 to 6 months, right? So those are really good indicators that you would need to be tracking. A lot of practice management software will pull some of these. Client management software a lot of times will pull these, but the thing to know about the key performance indicators is you need to know what you should be tracking and how to pull the numbers, and then just look at it on a month-to-month basis. Creating dashboards is one of those things we can help you. So if you need help with that, just let us know. So the other thing is you do not want to be overwhelmed, right? My recommendation is you should be going over your finances once a month. A lot of people call them CFO Fridays, maybe CFO Sunday, where the first week in the month you spend some time on your business, maybe a 2-hour block. You look over all this information, or maybe you do your bookkeeping. You make sure you set aside the amount for your taxes. You set aside the amount for business savings, right? Everything that I preach, and you look over all of this, right? And you don't want to get overwhelmed with like 18 different key performance indicators if you're a solo business owner. That's a little bit much, right? Looking at 3 to 5 numbers on a monthly basis, if you're the only owner, maybe closer to 3 there is completely fine, right? There's only a couple of things you should be tracking. Maybe you're only tracking 1 number, right? Maybe it's your average session fee, and then you take a look at your profit and loss statement each month. Or Maybe that's your big driver because you're a therapist in private practice. Now, if you're an ice cream shop owner and you have employees, you'd probably be looking at more key performance indicators, maybe 5 to 8 of them on a monthly basis to track the different areas of your business. Because once you have employees, now there's a lot of tracking with employees that you need to do. So yeah, a lot of people skip over looking at monthly reports on a regular basis, but I would highly encourage you to take a look at all these. Hopefully you found this helpful. If so, subscribe below or take a look at the detailed blog post that we have talking about this.